So you can start.
Good evening, members. We welcome you on behalf of the SIRC of the Institute of ICAI for the 70 hours program. And today's topic is CSR Applicability, Reporting and Compliances. We have the resource person, CA Charmi Shah from Mumbai. She is a BCom, Mumbai from Mumbai University. Fellow member of our institute, area of practice, interest tax related matters, statutory audits, internal audits, company law, ROC, and other compliances. She into many professional development activities. She is the co-opted member of Women's Member Empowerment Committee of ICAI for 21-22. She is co-opted member of CSR Committee of ICAI for 2021. Co-opted member of CCB MP Committee of ICAI for the year 1920. Committee members of Students Committee and Study Circle Committee of the Chamber of Tax Consultants Mumbai for the year 2018 to 22. She is a co-opted member of Women's Empowerment Committee of WIRC of ICAI for the year 17-18. Co-opted member of Direct Tax Committee of WIRC of ICAI for the year 2016-17. Member of Subgroup PDC Committee of ICAI for 16-17. She has taken a lot of seminars on ICDS and income tax at different study circles of WIRC, Nasik branch of WIRC of ICAI, Visakhapatnam branch of ICAI, and a regular speaker at Chamber of Tax Consultants. She is a regular faculty at CSR certificate course of ICAI. She has also co-authored books on technical guidance on accounting of CSR funds by third parties, publication by ICAI, handbook on certificate of Form CSR 1, publication of ICAI, handbook on audit of CSR activity, publication of ICAI, and technical guide on accounting for expenditure on Corporate Social Responsibility Act, publication of ICAI. With this very few words, I would like to introduce Charmi Shah from Mumbai for this session. Over to you, ma'am. Thank you.
Thank you, sir, for the kind introduction. Very good evening to one and all. I'm very thankful to SIRC to give me opportunity to share my views on the topic CSR. Thank you, Gopal Krishnan, sir, and hope all are in pink of their health and doing well, and most importantly, safe in this pandemic. So can we start our screen share? Can we start with the first slide? Yeah. So next slide. So before starting the topic, let's see at the sentence here. It says, when the wind blows, there are those that build walls, and then there are those that build windmills. This means the adage of building windmills in the middle of winds of change is a beautiful illusion of how you can harness the flow of life into something positive and creative by being open rather than being in resistance to it. So by being open, you get to see the hidden blessings in each situation and hence use it in your own advantage. So you turn into an alchemist who uses something negative to create something positive and fruitful. In the same manner, the companies invest in CSR to manage their risk, recruit their employees, bolster their brand in the eyes of investors and consumers, ease their supply chain, save money, increase access to capital, differentiate themselves from competitors, and sometimes, because it's just the right thing to do, try to create brand in the eyes of customers. So mostly the companies are increasingly ramping up their focus on social responsibility, whether it's campaigning women rights, protecting the environment, or attempting to liberate poverty on local, national, or global levels. From an optics perspective, socially responsible company project more attractive images to both consumer and shareholders alike, which serves to positively affect their bottom lines. So before going to the amendments, let's first look at the flow of CSR and its evolution in India. Next slide. Can we go to the next slide?
This one. Is it a rules, new rules? The previous one, right?
This slide is perfect. No, the last slide.
Okay.
Yeah. So corporate social responsibility was the first time introduced as statutory obligation for the companies by the way of Companies Act 30 under section 135. So thereafter, the companies' rule were notified on 27th February 14 to lay down the specification and procedures to be followed by companies while discharging their CSR obligations. The Companies Amendment Act in 2019 and 20 resulted in some major changes in CSR provisions under section 135 of the Companies Act. To provide for notified changes, the Ministry of Corporate Affairs had released the draft companies rule in March 2020, which were called as draft rules, inviting public comments. So recently on 22nd January 2021, the MCA finally issued the company's amendment rules, giving effect to the changes introduced in CSR by the Companies Amendment Act 1920. But the new amendment rules shall be affect the CSR programs or projects approved prior to 1st day of April 2021. So we do not require to see how legislation in India took place for section 135 in Companies Act. But just let's look at its one starting from 2013. So the enactment of the Companies Act 13 gave way to CSR in Companies Act, which is predominantly and the corporate governance issues, and now it was an important step that the CSR found way in Companies Act. So India was the first country at that time to do so. So of course section 135, which was a part of it. So later on, there were many amendments that happened to it, but the key that happened was the constitution of High Level Committee in 2015 for improved monitoring of implement of CSR policies. And of course, that year there was inclusion of penalty clause, unspent balance of CSR fund to be carried forward, unspent balance to be transferred to one of the fund in Schedule 7. So board and CSR committee is responsible for due diligence of implementing partner. Now in 2018, another high level committee was set up. They included carry forward of unspent balance for a period of 3 to 5 years, imposing monetary penalty for non-compliance, mandating impact assessment, strengthening the reporting of CSR, registration of impact assessment with MCA, additional 5% of admin expenses for company undertaking need, and impact assessment, etc. These things were recommended by the high level commission. In 2019, Companies Amendment 2019 included immediate preceding financial year and eligibility under section 135 notified, not notified, transfer of unspent amount to fund mentioned in Schedule 7, carry forward of unspent amount of ongoing project, introduction of penalty clause for non-compliance, including imprisonment. So in 2020, the notification, there were many changes like carry forward of excess spend, unspent amount relating to ongoing projects, transferring of unspent amount not relating to ongoing projects into Schedule 7 fund, and monetary penalties for non-compliance. So the amended rules of 2021 shall come into force on the date of their publication of their official gazette, that is 22nd January 2021, unless explicitly provided anywhere in the notification. So while some of the amendments will actually be relevant from 1st April 2021, some of them will be having immediate compliance implementation, that is from 22nd January 2020. So today, firstly, let's look at the amended act. What are the changes that took place on 22nd January? Then we will take up accounting and then the auditing aspects, that what compliance we have to do as a chartered accountant. Next slide. Can we move to the next slide?
Oh, ma'am. New rules and
Yes.
significant change.
So why are the new rules significant? There are 5 reasons. CSR definition change. Second is a shift from directional to mandatory CSR. Third is registration requirement for implementing partners with the MCA, increased rigor for internal control, and focus on impact creation. Let's go to the next slide. So can we go to the next slide? Yes. So now turn by turn, let's look at what is the changes done in the notification and amendment. So first we will take what is change in the CSR definition. So CSR now is a statutory obligation, and before that it was not there. So as a result of new rules, CSR is now defined under section 2D to refer to activities undertaken by the companies in pursuance to its CSR obligation under the Companies Act. So the amended rule further identifies the activities which do not qualify towards the CSR requirement of the companies. So what are the activities that are excluded from the definition of CSR activities? These are the list of it. The first one is activities undertaken in pursuance of normal course of business of the company. So here the question arises whether the employees can be migrated to their home. During pandemic, there were many migration of workers. So now if the company migrates its own employees, then whether it is considered as CSR? Now the solution is many circulars and notification have come out which have clarified that migration of workers of other company can be considered as CSR, but migration of their own workers cannot be considered as CSR. So noble course may include sale, supply of goods and services. So mere absence of profit motive will not take any activity out of the normal course of business. However, in view of COVID pandemic, an exception to this was created by the way of MCA notification, which was issued on 24th August 2020, allowing the companies engaged in research and development activity of new vaccine, drugs, and medical devices in their normal course of business to undertake such research and development in relation to COVID-19 as their CSR obligation. But this was also restricted to few years, that is for 3 financial years. From not any financial year, it's only for financial year starting from 2020 to 2021, 21, 22, 22, 23. So only 3 financial years starting from 2020 and ending to 2023. So this exception has been duly incorporated in new rules subject to certain conditions. And what were the conditions? That the first was such research and development activities shall be carried out in collaboration with any of the institutes or organization mentioned in item number 9 of Schedule 7 of the Act, including public funded university, IITs, ICMR, that is the Indian Council of Medical Research, etc. And the second condition was detail of such activities shall be disclosed separately in the annual report included in its board report. The second exclusion in the activities of definition is any activity undertaken by the company outside India shall not be considered as CSR except for training of Indian sports personnel representing any state or union territory at national level or India at international level. So first, before the amendment, it was activity outside India only. There was no exception to that. And now little change that is included with some exception that the Indian personnel with union territory and national level or India at international level. The third point is contribution of any amount directly or indirectly to any political party under section 182 of the Act by the company shall not qualify as CSR. There is no change in the point. Before the amendment also, this point was in the exception list. And the fourth is activity benefiting employees of the company as defined in section 2K of the Code of Wages Act 2019. To elaborate this point, two key points that are changing here is activity benefiting employer of the company is employees under Code of Wages. Initially, Code of Wages Act was not included in the definition. This is very significant change. The meaning connotation of the word employee that is now connected with Code of Wages Act. So for our understanding, the employee or people which are hired for reward are only taken. So moreover, the regulation itself gives definition for contractual employees. Also that extends to definition should not include contractual employees. So coming on to the second point, that employees benefiting part. The initially talked about benefiting employees and the community. That was okay. But the draft rule came in March 2020 and also indicated significant benefits that talked about 25% of the benefit. So now the amendment which has come in is too specific and has taken away the word significant. So that extends any benefit that goes to employees or any project which goes to employees which actually gets disallowed. And the second part which is amended is now the word family. The initial draft 2020 spoke about family and its benefit. So employees family and its benefit. But the current situation, the word family is taken away, which so that the interpretation can be if it is not benefiting employees but benefiting family, then still it can be said to be a CSR activity. But benefiting to employees should be avoided. So after this discussion, does it mean that the employees cannot be beneficiary of CSR projects if done to society at large? So for example, let's take an example which was done into my client's company, that the company had made a hospital bed for society at large. So, but in those beds, there were no special reservation for the employees of the company. But in case they use it normally as others in the society, that doesn't mean that that amount spent on employees will be reduced as CSR spend. As it is an organ of the society, they cannot be excluded and the employee can take benefit of the CSR done by the companies. The fifth activity is activities supported by the companies on sponsorship basis for deriving marketing benefit for its product or services. So here there was an FAQ released by an NCA. So let's take an example of favor marketing or sponsorship. Favor marketing means the company is getting benefit from the CSR projects directly. So sponsorship has been done for the product, but not deriving benefit for their own product or services by that sponsorship. So one of my clients' organization had taken up an initiative for sponsorship of a part of some urban city considering environment, sustainability, hygiene perspective. This is unlinked to their product. So such kind of one should we explained to CSR committee that we are not getting any direct benefit from the sponsorship done to develop the urban city. So this can be considered as CSR activity, and the committee can accept that this is not disallowed as per the law. But let's take another example, which is against CSR, and this activity cannot be considered as CSR. Like for example, a bank motivates the customer to spend 5 lakh rupees on credit card. And the bank says that if the customer spends 5 lakh on credit card, then the bank will contribute 500 rupees towards charity activities. So is that 500 rupees spent by the company considered as CSR? The answer will be no, because there is a direct relation between the customer and the CSR activity done. So if the customer does not spend 5 lakh rupees, the bank is not able to spend 500 as charity or in the charity activity. So this is not considered as CSR. So direct sponsorship made is benefiting the company directly. Many a times organization spend or sponsor ball pens and materials. So here we can see direct and indirect nexus between them. So if you can have a sensitive analysis to conclude that there is no nexus to benefit, then it can be considered as CSR activity. Else you will have a tough time to prove the CSR committee that the CSR done by the company is not benefiting the company directly. So for that, for systematic analysis, sensitive analysis, you should see the facts of the project, the reports and all the documents relating to the CSR project. The board or committee should see each aspects very clearly, because this is a very gray area. There is a very thin line of demarcation to decide whether this is a CSR activity which is eligible or this CSR activity is not eligible as the expense of the company. So for example, a COVID related awareness is specifically permitted as CSR activity as per circular dated 12 January 2021. But there can be too much marketing advantages from this. But as it is allowed specifically by the circular, it is an allowable CSR activity. One more example, if we take that a company has built a water cooler everywhere in the city, and it has carved a logo on it. And this logo is of the company, which can be used as marketing purposes. So there is a brand visibility of the purchaser, and it markets its company. So this logo, as it markets its company, cannot deprive the company from recognizing it activity of doing the water cooler everywhere in the city as CSR activity, and it is an eligible CSR activity. And the last one is activity carried out for fulfillment of any other statutory obligation under any law in India. So we'll go to the next slide. Now, what are the changes specifically done in CSR definitions? There are 3 things which has undergone sustainable change after the amendment. That is the ongoing projects, administration overheads, and eligible entities. First, let's look at ongoing projects. What are the changes and what is the definition of ongoing projects? Initially, the ongoing projects was not defined specifically, but after this amendment, they have specifically defined ongoing projects. So the ongoing projects has been defined to mean a multi-year project undertaken by a company in fulfilling of its CSR obligation. That is for the maximum duration of 4 years. That is the first year in which it has commenced plus 3 years excluding the year of commencement. So we can say that it is a multi-year, and but later extended beyond 1. It can also be extended by the board by 1 year by board resolution on and also on reasonable justification. So ongoing projects entail certain added responsibility for companies, such as requirement to monitor their implementation as per approved timeline. An attempt to define ongoing project is definitely a welcome step, but ambiguity remains with respect to projects, the implementation of which goes beyond the stipulated period of 4 years. So as per the current rules, the company may not be able to undertake such project as their CSR activity because they shall not qualify as ongoing projects. And any unspent amount in that regard shall automatically be transferred to the fund specified in Schedule 7 as required under Section 135(5). This we will look into very much detail in the subsequent slides. But just what is defined in ongoing projects, I want to elaborate at this stage itself. So, for example, if a company contributes to an annual running expenses of a cancer hospital for spending for next year, cannot be regarded as ongoing project. But, for example, installation of a new facility at the same hospital, if already undertaken during the year, should be regarded as ongoing project. So to regard it as an ongoing project, it is not necessary. It is necessary that some spending must have been done during the year. And also, if there is a binding commitment on the part of the company during the financial year, the fact that nothing has been spent during the year should not preclude it from doing it as an ongoing status. So the essence of the retention money is rolling the expenses to the next year and claim it as expense for the year. So target spending or not spending amount does not qualify it as an ongoing project. We have to see it, the intricacy of the project. The second definition is administration overheads. So the latest amendment has given a new term for general management and administration in relation to CSR functions. So the definition explicitly excludes expenses directly incurred for designing, implementation, monitoring, and evaluation of a particular CSR project from the ambit of administration overheads. The board was required to ensure that the administration overhead incurred a furtherance and do not exceed 5% of the company's total CSR expenditure. So the meaning of administration overhead was, however, not specified under the draft rule. But assigning a definition to this rule is a welcome step, and it gives greater clarity to the company. So in my opinion, the government should also mention few examples of costs that can qualify as administration overhead for better understanding of the term. But for now, we consider that it should not exceed 5% of CSR expenditure of the company, and it is to be noted that the draft rules proposed an upper limit of 10% for administration overhead for the company undertaking impact assessment. So for the company carrying out impact assessment have been allowed to claim 5% or 50 lakh rupees, whichever is less, as a CSR expenditure for impact assessment. Going on to the third definition, that is eligible entities. The board of the company has taken and defined eligible entities, which entities are eligible for doing CSR activities. So the third parties as defined in the Rule 4 1 and Sub-Rule 1 says that the eligible entities would be a company established under Section 8 of the Act, or a registered public trust, or a registered society registered under 12A and 80G of the Income Tax Act, either single or with any other company. Second, it would be any company established under Section 8, which is registered trust, registered society established by central government or state government. And it would be any entity established under the Act of Parliament or a state legislation. So presently a company has to follow a thorough and stringent selection process so as to ensure that the organization goals towards CSR are achieved in most transparent, effective and efficient manner. So further, the company is interested in engaging a third party for its implementation of CSR activity has to scout for appropriate entities on its own. So the database of registered implementation and agencies would become a handy tool for the companies looking for implementing entities. And so it is noted that draft rules have omitted references to registered public trust and society for CSR implementation, which was present in the original policy rule of 2014. Such an omission was objected by the stakeholders and of course by the public trust and societies, have been now duly mentioned as allowed implementing agency under the new rules. So such a move is appreciated and it gives companies access to a wider range of entities to fulfill their CSR obligation. Sir, can we go to the next slide? So the Ministry of Corporate Affairs in the amended rules 2021 shifted CSR spending mandatory for voluntary. So in one of the article said that India has equated CSR with spending part, whereas in other countries it is equated with the responsibility part. So in India, spending is the main crux in CSR and is the responsibility as well. So what are the implementation in case of unspent CSR fund? There will be a CSR liability on the company as it has not spent its CSR fund. Then first, if it has entirely spent its amount, then it has to report in the director's report. But if the entire amount is not spent, then the company has to consider whether the project is ongoing project or not ongoing project. If it is an ongoing project and the amount is unspent, then it has to deposit within 30 days in a separate bank account called as unspent CSR bank account. And if it is not ongoing project and still the amount of CSR is unspent, then it has to transfer to government fund notified in Schedule 7. So one more thing it comes to the mind that in case of ongoing projects, it has deposited the amount in unspent, a separate bank account, unspent CSR bank account. But that is also not used by the company within the 3 financial years after the deposit. If the date of deposit is 1st April 2021, and after that 3 years, it has not spent the amount, then that amount has to be transferred to government fund notified under Schedule 7 within 6 months or 30 days of its end of the financial year. So the Companies Amendment Act as on 22nd January 2021. Now, if you not spend, then you have to give it to the one of the specified funds. The rule is that the unspent amount of not ongoing project, then you have to deposit in one of the specified fund in Schedule 7 within 6 months, that is September 21. So if the financial year ends in 31st March 2021, you have to deposit by September 21. Earlier, there was not mandatory to make provision for the same, but now it would be mandatory to make a provision for the same. But now it would, if you don't spend it, then the company first has to make the provision in the books of account, and the second, it has to transfer it to the specified fund within 6 months. And if it is ongoing project and it is not yet used after 3 years also, it has to be transferred to the fund specified. So now question arises for fund which does not spend up to March 2020. So there are two ways the company can deal with. First, where it was unspent, they disclose, but no provision was made, and give reasons in the disclosures. That is the board report. But the other way was, they made provisions in the books as unspent CSR account. So now with this amount not used by March 2021, this has to be transferred to Schedule 7. It can be said that this amount does not belong to this year, so should be deposited in bank depending on ongoing and not ongoing. So board shall still explain the reason for not spending. This remains. For example, if the project is not finished as it is ongoing project, so I park my money in the project, then identify the amount required to be done in the project for not indefinite period, for max 3 years. For that, you have to identify the outlay required for the ongoing project. That is one part. The second part is the amount not retained has to be transferred to any national unspent fund within 6 months of the end of the financial year. So this fund is not yet constituted by the government, and if it is not constituted by September, we are right now in September, so we can transfer the unspent amount in any of the fund that is described in Schedule 7. So we do not actually have total 6 months to decide whether we are retaining the amount or not. Why I say not 6 months is, we have to get board's approval for retaining the unspent amount. For approval, we need to actually list down reasons and analysis of amount to be retained. Most board reports are made within 45 days of the end of the financial year. So therefore, effectively, the complete analysis will take 2 months from the end of the financial year. And so effectively, in my view, you only have 1.5 months from the end of financial year to decide whether the project was ongoing, project not ongoing project, or what amount is to be kept as retention, or which amount you want to transfer it in the Schedule 7 and which fund you need to transfer. So we have 6 months to transfer the amount, but we do not, but actually in reality, we do have 2 months to analysis and retain the amount from the end of the financial year. So action plan needs to be made, as CSR committee still has to include the one of the agenda which project should be ongoing project, identify it likely, what time it will take, and it's a big task for the CSR committee to do that. So the board to monitor, implement, we still are in the last slide. Can we go back to the slide?
Ma'am, do you want to move to the previous slide or else?
Yes.
Sorry, 1 minute. Is this one right? Mandatory
Yes.
CSR spending.
No. We are going to the next.
Capital assets.
Yeah. Yes. So board needs to monitor implementation of ongoing projects and shall be competent to make notification. So now board needs to have approval for 1+3 years, and over the period you need the board can also give permission for 1 more year. But the company has the opinion that why is the maximum period of 4 years set up? Will my visibility of ongoing projects be less? But it's not the case. The MCA wants that the company should review their project on periodical basis. So they have made a point of 4 years maximum, so the new project can be reviewed every 4 years. Now going on to the capital assets. Under the new rules, a company is further allowed to spend CSR amount for creation or acquisition of a capital asset held by company established under Section 8 of the Act, a registered public trust or a registered society having charitable objects and a CSR registration number. From this year, CSR registration number should be every implementing agency should have a CSR registration number to do any projects of CSR. If it is an ongoing project, no need to have a CSR registration number by the implementing agency. But if it is not ongoing projects, every implementing agency should have a CSR registration number. Second, beneficiary of the said CSR projects in the form of self-help group, collectives, entities, etc. Also, public authorities under ICAI Act, the public authority has been defined as any authority, body, or institution of self-government established by the Constitution or any other law by the Parliament, or any law made by state legislation, appropriate government, or any self body owned or controlled by non-government organizations. So as argued in the report of High-Level Commission on Corporate Social Responsibility in 2018, the rationale behind allowing companies to use CSR amount for capital creation or acquisition is to encourage sustainable and effective initiatives. So the idea is not to limit CSR amount to revenue expenses, and instead it is to use to create capital asset that would yield future economic benefit. So the genesis have come from the High-Level Commission report that the government felt that the overall intent of legislation is to work for public good. But there were companies who were saying that they are doing CSR, but they were creating assets in their own books, which means you are creating asset as enduring benefits which could be appreciated. So for example, you are running a school program as a part of your CSR for acquiring land and building. But in reality, NGO is running school, but building is sitting in the books and getting appreciated in the company's book. So that was not proper. And another example is a mobile healthcare van running for good public care of public in your books and getting appreciated. So the overall intent of legislation is to work for public good. That was very a clear indication of the High-Level Commission report, that implemented in rules also. So practically it means that starting from 22nd January, where rules have got notified and implemented, all companies which have kept assets in their books need to transfer that asset to the implementing agency which have their own ownership. And the last point is existing capital asset is to be transferred within 180 to 90 days. That is the any capital asset created by the company prior to the commencement of the company's amendment review shall within period of 180 days, and such there is a certain extension given that is for 90 days should comply with the requirement of the rules. So you have to identify and transfer that asset in maximum 180 plus 90 days, and going forward it would be too important for the board and committee to really look forward that if any asset is created, then ownership needs to be with one of the bodies and you may be only the custodian. Next slide. CSR committees. CSR committees is only created for every company who has net worth of more than 500 crores or turnover of more than 1000 crores or net profit of 5 crores or more during any financial year shall constitute a CSR committee of the board consisting of 3 or more directors. So out of which one director shall be an independent director. So before the amendment, it was during 3 preceding financial year, and now it is only financial year. There was also relaxation given that where the amount to be spent by the company does not exceed 50 lakh, the requirement for constitution of CSR committee shall not be applicable, and the functions of the committee provided shall be discharged by the board of directors itself. So, but if the company, the committee of CSR is formulated by the company, then the board has to give the power to alter the annual action plan for CSR activities in accordance to the recommendation based on reasonable justification. So, when compared to the original provisions on CSR committees in the CSR policy 14, the new rules were quite detailed. So the earlier rule of CSR of 2014 vaguely mentioned instituting a transparent monitoring mechanism for CSR implementation without specifying its requirement. But the new rules make the process easier by laying down what all needs to be necessarily included by the company in its action plan. Functions of such committees shall be discharged by board of directors. So pursuant to new rules, the CSR committee has to be given the task of formulating and recommending to the board an action plan in pursuance of CSR policy, and the aforesaid plan shall include the list of CSR projects to be undertaken that should be directly and only of activities which are undertaken under Schedule 7 of the Companies Act. The committee should have the manner of execution of such projects, modality of utilization of funds and implementation schedules, monitoring and reporting mechanism for the project, and detail of need and impact assessment, if any, for the projects undertaken. Next slide, please. Sir, can we go to the next slide?
This is moved, ma'am. Is it getting delayed or something? Implementing partner is a page I am in.
Yes. Implementing partner, this is the new change in the amendment. The mandatory, the first is mandatory registration with the central government. So it was in the draft rule also to make this as regulatory concern, but as of now, they only required to do registration. Maybe in future it may be a regulatory in nature. So registration should be done with the IT authorities as well as with MCPs. The second is form CSR 1 to be filled electronically and submitted to the register of the companies. So rule 4 to be mandates that the form CSR 1 shall be signed, submitted electronically by the entities on MCA portal and shall be verified digitally by a CA in practice or a company secretary in practice or a cost accountant in practice. So on submission of CSR Form 1 on the portal, a unique CSR registration number shall be generated by the system automatically. So CSR registration number of implementing partner is to be disclosed in Annexure 2. What is Annexure 2? Annexure 2 is Annexure to Board of Directors report where details of CSR activities, policies, the committee report, the members of committee is being illustrated. So in that form itself, CSR registration number has to be disclosed. The form CSR 1 is termed as registration of entities for undertaking CSR activity. Not required for implementing partners of project approved prior to 1st April 2021. So this CSR form 1 or the registration is not compulsory for implementing partner prior to 1 April 2021. And implementing partner has to be registered under 12A and 80G of the Income Tax Act 1961. Therefore, it seems that only ongoing projects may be carried out by unregistered implementing agency. So there is some consensus that CSR expenditure will not be qualified for tax purposes. Then why are we bringing section registration under section 12A and 80G mandatory to register for register of companies? There are two reasons for this requirement. That first, because 12A and 80G registered organization is better monitored by the authorities and they have all the filings done. So from next year, all old charity organization who is registered under section 12A and 80G will require re-registration. So now they will have a better control over these entities. And the second possible reason is last certain years, lot of non-profit organization has come forward and said that we would like to be the implementing partner. So the government wants to plunge in this implementing partners into the field. Now that is the possible reason why this requirement has come in registration and re-registration. So the entity has to file form CSR 1 electronically, and this provision is applicable with respect of 1st April 2021. Next slide, please. The next change is the amendment is increase in internal control. So it might be a kind of new terminology for people working in CSR domain space, but you know some of the things that brings this kind of forays. The first is board has to satisfy that the CSR fund is used for the purpose and manner approved by it. The second is CFO or a person responsible for financial management to certify CSR fund utilized for manner and purpose approved by the board. So all these things very clearly point out a kind of high rigor in terms of compliances. And you know, this kind of recommendation and CFO certifying definitely requires a high maturity in terms of internal control. So what would be your input for a company designing a robust internal control is to look into the design perspective. So one thing that stands out is CFO certifying companies. What we generally see, and it varies towards companies. So a lot of CSR initiatives are carried out by HR admin. In many companies, it would be finance head or finance team. But one thing which enforces the definition now, the CFO certifying should now enforce that everything is complying with section 135. And the new venture which comes out wants detail of amount spent, unspent, implementing agency part, asset, capital asset, etc. So lot of rigor will go into it. And as CFO is certifying, someone from the team or internal audit team will also ensure that that is proper internal control in this. So CFO certifying, it will see from internal financial perspective, that is guidelines of the company, what activities qualify as CSR, make a check of time, check which education will be required in the team about CSR rules, and Section 135 amendments and Companies Act allowing CSR activities, and it would be as per all requirements. So robust process should be ensured for the what kind of sampling, impact study. You have to check on financial check and also quality check. So after this check, it got to be that the CFO would not take his sign on risk and do proper reporting of CSR activity, and it's all in place. He will make sure that all the activities and compliances are on place. The third is board to monitor implementation of ongoing projects with respect to approved timeline and year-wise allocation. So then the new disclosure template is applicable from financial year 2021. And second is excess CSR spend carried forward and set off surplus arising of CSR projects. Unspent CSR amount transferred to unspent CSR account and or schedule. 7 funds. This depends on ongoing projects or on not ongoing projects. Details of capital asset created, acquired during CSR, and the disclosure on website will be a composition of CSR committee, CSR policy, projects approved on ongoing basis. Next slide. Impact assessment. This is a very important change from this notification. Two things need to be kept in mind. Is first is the aggregate spending, and second is on what is on the particular spending. So the company can't just spend the amount and they have to see their social impact of the project on the society. So the impact assessment is also mandated. Impact assessment expenditure should be limited to 5% or 5 million, whichever is less. For this, 3 things needs to be checked. The first is company with average CSR obligation of rupees 10 crores or more in immediate 3 preceding financial year shall take impact assessment through independent agency. Second is impact assessment is to be taken for CSR projects with outlay of 1 crore or more. Impact assessment is to be undertaken for projects completed not less than 1 year before undertaking the impact study. So the impact assessment report is to be placed before the board, as details and reports of impact assessment undertaken and amounts spent on the same has to be disclosed in the annual report of CSR. So that does not mean that the impact assessment for other projects may not be done. So if you have to claim expenses for impact assessment, then impact assessment has to be done, and these 3 points first has to be triggered for impact assessment. Then only impact assessment for the projects can be done. Thus, after the notification of the new rules, company qualifying the mentioned threshold shall mandatorily required to carry out impact assessment as their CSR contribution. So it is hoped that such a requirement will result in more meaningful contribution by the companies towards the society. There is, however, scope for clarity with respect to the provision allowing the companies to claim 5% towards CSR expenditure for impact assessment. So prima facie, it gives an understanding that such companies have the option to claim 10% in total as their CSR expenditure, 5% for administration overhead, and 5% for impact assessment. So although the same has not been explicitly mentioned in clear terms, a statement from the government in this behalf can remove this ambiguity. So earlier it was ambiguity. Now the definition is very clear. The expenses by the company itself, which is the contribution to NGO. So NGO you have taken for implementing the direct project expenses or project overheads. Next slide, please. So this is international organization. From this amendment, international organization has come into effect, which is defined under UN Act. So the high-level committee on CSR, which was headed by G.T. Srinivasan, has recommended the introduction of international organization in India's CSR region. So the recommendation has been duly incorporated, pursuant to which companies are allowed to take help of this organization in designing, monitoring, and evaluation of their CSR projects, and in assisting them with capacity building of their personnel. So it is noted that the draft rules also propose engagement of international organization with respect to implementation of CSR project subject to prior government approval. But the same has not been notified in the new rules. Next slide. Next slide, please.
Now move. Penalty.
Penalty clause. This is very important clause due to which CSR has become mandatory. So first, the penalty is done in case the company fails to disclose unspent amount in annual report on CSR or transfer unspent amount to fund specified in Schedule 7 within specified time, and or transfer unspent amount relating to ongoing projects into unspent CSR account within specified time, or transfer amount remaining unutilized in unspent CSR account after 3 years into fund specified in Schedule 7 within specified period. So the company in default shall be liable to a penalty of lower of twice the amount required to be transferred to the fund specified in Schedule 7, or unspent social account responsibility, or 1 crore. And in case if there is an officer in default, then the penalty would be 1/10 of the amount required to be transferred by the company to the fund specified in Schedule 7 unspent CSR account, or 2 lakh rupees. So there is a heavy penalty charge, and this makes the CSR more mandatory rather than voluntary. We'll go to the next slide. Here we complete the amendment parts of this notification, which was issued in on 22nd January 2021. So now let's look at into the auditing and accounting part, which are the compliances to be done by a chartered accountant. Can we move to the next slide? Yeah, accounting part. Next slide, please. What is financial accounting is? How should be an accounting in the books of accounts for CSR specifically. So knowing section 135 would help us to know how should be the accounting be done. So the amount of contribution made by CSR would generally be treated as an expense and charged to the statement of profit and loss unless it gives to a rise to an asset. So according to the guidance note on CSR, an asset is to be recognized only on basis of an evaluation over the control over the asset and approval of future economic benefit of the company. So what does section 135.5 says? 135.5 says how should be the accounting done. It says that every eligible company shall ensure that the company spends in every financial year at least 2% of the average net profit of the company made during the 3 immediate preceding financial year in pursuance of its CSR policy. So in the case the company has not accomplished 3 years from its incorporation, then such number of years. So section 135.5 provides that the company shall give preference to the local area and areas around it where it operates for spending the amount earmarked for CSR activities. And this is also clarified by the General Circular of 6/2018 dated 28th May 2018. Next slide. Here we now let's see in various cases how should be the accounting done. In case of CSR, contribution received from various projects. So if CSR, if the third party or a company itself is receiving contribution from different companies for different projects, then the amount should be identified project-wise and the receipts as well as amounts spent corresponding to the project should be marked and reflected separately. So both the contribution received and the expenditure made should be charged to income and expenditure account of the third party, and fixed asset acquired should be taken to the balance sheet of the third party. The next point is return of unspent amount. So how should be accounting done when there is a return of unspent amount used? So the CSR donation received by the third party must be applied for charitable purposes within the specified period as per project's program in the CSR policy of the donor. So in case the CSR donation are not utilized within the specific period during the year, the same may either be returned to the donor or the same should be utilized as specified by the donor company. And the accounting would be done as CSR contribution A or project A. We should write the project name specifically, as there should be a bifurcation of project wise. CSR contribution A or project A account debit to bank account. The third one, how the accounting should be done in case of accumulation of unspent amount. In case the amount required to be spent on project remains unspent at the end of the year, then the entity needs to accumulate the balance amount to be utilized in future period. So such unspent amount at the end of the year would be carried forward to the next year, and the required formality of compliances, if it is a third party, it should be registered under Income Tax Act, should be done. So if the entity is registered under 12A, then the charity entity needs to e-file Form 10 specifying the purpose of accumulation before filing the return of income. And how would be the accounting entry? Accounting entry would be CSR contribution project A account debit to CSR fund project A account. CSR contribution project A account debit to CSR fund project A account. So CSR fund project A account should be transferred to the balance sheet and an asset should be created for it. And the last point is expenditure out of accumulated unspent amount. So when the required compliances are made under Income Tax Act, the accumulation for 5 years is treated as application of income in the year of accumulation under ICAI. So in subsequent year where the expenditure is made out of accumulated fund, the entry would be CSR fund account. If we consider the same CSR fund project A account debit to bank account. So the expenditure should be done from the same fund that was created in the last year. We created a fund as a fund project A account. So the spending should be done from the same CSR fund project A account debit to bank account. So the amount spent out of this accumulated fund would not be charged to income and expenditure, but would be reduced from the fund created. Next slide. Now let's see what should be the recognition and measurement of CSR expenditure in our books of accounts. So the accounting relating to CSR may take shapes in different scenarios. First, if the expenditure is done by the company itself, or it has just spent its amount, or the company has just spent the CSR by contributing to its fund, or the company has done through its registered entity, or there is some unspent amount. So in all the cases, the CSR should be charged as an expense to statement of profit and loss account. And unspent amount should be treated as per section 135 and 135(6) of the amended act. And what does this section 135 says? 135 says that it's for ongoing projects. If there is an unspent amount, it has to be transferred within 30 days of the end of the financial year to a separate bank account. And what does the amended 136 Act says about the unspent amount? That it has to be transferred to any fund that is specified in the Schedule 7 within 6 months from the end of the financial year. So let's go to the next slide. We can see more recognition and measurement of CSR expenditure. Next slide, please. Yeah. So first we'll take how will be the recognition and measurement criteria of income or surplus earned from CSR projects or programs. So any surplus arising of CSR activity shall not be a part of the business profit. So such surplus shall be used on the following within 6 months from the expiry of the financial year. What will be the effect of surplus? As per amended act, they have said that that surplus amount should be plunged back to the same project or transferred to unspent CSR account and spent in pursuance of its CSR policy and the annual action plan of the policy. The second is CSR expenses wrongfully claimed as products, services cost and not shown separately as CSR. It has to be recognized as non-cost item as per declared CSR policy of the company and reflected in the profit reconciliation statement. What should be the effect of eligible expenditure? Whether a particular expenditure spent on CSR will be allowed under ICAI Act for the company will depend on the nature of expenditure itself. So if it is in nature of revenue expenditure and the CSR is in revenue expenditure, the company has incurred expenditure on activities specified under Schedule 7 of the Companies Act 13, the CSR expenditure related to business of the entity, then such expenditure should be treated as an expense in the statement of profit and loss. Where a company receives a grant from others for carrying out any CSR activities, the CSR expenditure should be treated as net of grant. And when income is earned during the course of conduct of CSR activities. So the surplus arising from CSR activity is not arising from the transaction with the owners. It would be considered as income for accounting purposes. Next slide, please. Now this ends with, let's go to the next slide. This ends up with the next slide. And we'll start with the auditing aspects. When the government has brought in an amendment in Companies Act providing a 3-year jail term for violating CSR norms, the government is, however, reconsidering its decision and may make it a civil offence, but it has already created penalty clause. So the inclusion of details of CSR spending in financial statement and enhancement of disclosure is likely to make the CSR framework transparent and robust. So there is a huge spending of CSR, so audit is very important role in the economy. So the requirement of audit of CSR activities seems not to be mandatory as per Companies Act 13. However, various the Companies Rule 14 require monitoring, reporting and mechanism for CSR activity. So the question arises, what are those provisions? They are Rule 4, 5, 6 of the CSR Rule 2014. Going on in detail, what is Rule 4? The sub-rule 2 of Rule 4 of the CSR rule says that the board of a company decides to undertake its CSR activities through a company established under Section 8 of the Act, or registered trust or registered society, other than those specified. But those companies or trust or society shall have an established track record of 3 years of undertaking the similar projects or program. And the company has to specify the project program, its modalities, its utilization of projects, and monitoring and reporting mechanisms. Rule 5 also says that the CSR committee shall institute a transparent monitoring mechanism for implementing of CSR projects or program or activity undertaken by the company. And the last Rule 6 says that the CSR policy of the company should include a monitoring process of such projects or programs. So hence the monitoring of CSR activities and its reporting is mandatory. Also, it is the responsibility of the company. In fact, it is the responsibility of the CSR committee of the company to monitor the fund of the company which are to be utilized as per CSR policy of the company. So in case where a company is complying with its CSR obligation by merely making a contribution, that is donation, which is specifically allowed in Schedule 7 of the Act, there would not be requirement of any obtaining any report of such contribution. So however, where the CSR obligation is done through third party, report of utilization of funds should be obtained from the third party auditors by the company. So the CSR committee is to have an effective CSR compliance of only monitoring and reporting requirement of CSR policy rules. Next slide, please. Now, what are the responsibility of the auditors? In two cases, where a company undertakes CSR activity on its own and where the company undertakes CSR activity through third party being eligible Section 8 company, registered trust or registered society, the company should obtain an independent practitioner report on utilization of such CSR fund. So let's go to the next slide. Can we go to the next slide? The first, let's consider wherever a company undertakes CSR activity on itself. For itself, the company undertakes activities undertaken within the purview of Schedule 7 of the Act. So if there is mere contribution or donation, then the same is it should be specifically allowed under Schedule 7 of the Act. And separate disclosure of CSR activities has to be done as per Schedule 3 of the Companies Act. So the expenditure on the project is incurred as per company's rule, and also the auditors should check whether the compliance has been done as per SA 250, that is consideration of law and regulation in an audit of financial statement, and also SA 720, which says the auditor's responsibility relating to other information. So the auditor has to comply with the guidance note on audit of expenses as well. So where it undertakes CSR activities through a third party, being an eligible Section 8 company or registered trust or registered society, the company should obtain an independent practitioner report on utilization of such CSR fund from the auditor or CA in practice of the third party to whom the funds are given by the company for implementing the CSR activity. So the auditor should check whether in its management review that is published the CSR report on its website citing its URL. So on its website or its CSR report, the undertaking has accounted for its policy area. So the auditor should have a total check on everything. It's a UN GRI report that complies with relevant requirement of its content. And now going on to the next part, that is the company should obtain a CA, that is, or auditor's report on utilization of CSR fund if activity is done through third party. So every funding agency, including CSR corporates, asked for utilization certificate to track their project expenses, which may be audited or unaudited. So generally, unaudited utilization certificate is sent to funding agencies with the signature of the head of the organization. So audited utilization certificate was asked only once a year or at the end of the project. But what was a problem faced by the utilization certificate was there was no uniformity. There was no uniform format of utilization certificate in FCRA or income tax. So generally, either a chartered accountant gives utilization certificate as per his format, or sometimes funding agency provides specific format for it. Because of this non-uniform format, problems are faced by statutory auditors of corporates. He has to certify all the expenditure spent by the company under Section 135. So he needs to comply all the utilization certificate and give it to the head office. Now this utilization certificate received from small NGOs were in different format. And since all format of utilization certificate were so different, it was very difficult for the auditor to comply such utilization certificate. To solve the problem, ICAI has given a specific format of CSR fund, and that is called the Independent Practitioner Report on Utilization of Fund. So the format of utilization report is being issued after duly vetted by the Auditing Assurance Standard Board. And wherever a company is required to comply with CSR regulation, it may undertake the CSR activity either by the company itself or by the third party. The ICAI has said that the company should obtain utilization of CSR fund if CSR, a CA or the auditor's report on activity is done through third party. And in an advisory issued of the members of ICAI, the company to whom CSR provision under the Companies Act 13 said the through NG should obtain an independent practitioner report on utilization of such CSR fund from the auditor or CA in practice. And independent practitioner report on utilization of CSR fund after verifying that the third party has spent the fund on CSR activities as per Schedule 7 or Section 135, or also with accordance with the guidance note of reports or certificate for special purpose. The ICAI has released a draft format for independent practitioner report. And this draft report is available on the website. We can download that format. The first part is the introduction part and the second part is the management responsibility. And we also can give an opinion on what we have considered it while the auditing of the third party. Next slide. Can we go to the next slide? UDIN, as we all know, UDIN is made mandatory, and the institute has listed several certificates which is now mandatory for funds, grant utilization for charitable trust, NGO, statutory obligation, authorities, FEMA, FCR, and other laws. Next slide. Yes, Carol. Next slide. The government is providing various relief measures and relaxation in order to boost businesses and economy. In same context, the MCA has postponed the applicability of CARO 2020 from financial year 1920 to financial year 2021. So now MCA wide order of 17th December 2020 has changed the applicability date of CARO to financial year commencing from 1st April 2021. So CARO will be applicable from financial year 20, and now CARO 16 will continue to be applicable for financial year 2021. So the CARO is the listing of reporting requirements that are needed for auditors who audit a company or businesses. So MCA has issued CARO to enhance the scope of audit, maybe in consultation with NAFRA, released CARO 2020. So now it lists down the subject matter on which the applicable companies are mandatory to require to report. There is a list of amendments in CARO 2020. There is no alteration in the applicability of CARO 2020, but CARO 2020 comprises of overall 21 clauses against 16 clauses in 2016. So 7 new clauses were entered in and 1 clause was merged with another and 1 was deleted. So as recently MCA has notified the CARO So let's look to the amendment that was made in CARO 2020 with regards to compliance of CSR. Clause 20 that says reporting of CSR compliance. So what is the newly entered provision is the fund transferred by the company as per section 135(5) and 135(6), other than those designated to an ongoing CSR project, must be specified in the report. We have already seen 135(5) and 135(6), which says that for 135(5) for ongoing projects, unspent amount has to be transferred within 6 months, and 135(6) unspent amount should be transferred within 30 days of the end of the financial year. Next slide. So in nutshell, a new clause has been inserted in CARO 20, which requires the auditor to report on whether unspent CSR amount has to be transferred to a fund as specified in Schedule 7 or a special designated bank account, which is for relating to ongoing projects. Now, what the main thing that comes into mind is what are the duties of an auditor for disclosure to the CARO. This is the main thing when we consider a company audit. What would be the duties? The first one would be the auditor needs to obtain board report of CSR responsible policy as recommended by CSR committee. Second, the agenda and minutes of CSR committee has to be taken by the auditor. The working of the amount required to be spent under section 135 of the Act detailing the calculation of average net profit. What would be the calculation of average net profit would be as per section 198, read with section 135. And also taking into consideration section 197 of the Companies Act. Second, the auditor also has to obtain confirmation from the management and review whether the CSR activity undertaken by the company are in accordance with the Schedule 7 of the Act. This is very important point because Schedule 7, if the activities are outside the purview of Schedule 7, it would be an ineligible CSR activity. Then the auditor shall verify the amount spent in respect of ongoing projects with the supporting document such as expenditure receipts, bank statement, passbooks, etc. Also, in regards to unspent amount, the auditor should verify the bank account to ensure whether it is earmarked for CSR activity only and it is open for that respective financial year only and called as unspent CSR account. Also, the auditor is not required to report that the auditor is required to verify that the amount is transferred to the specific bank account and has been utilized for CSR activity itself within 3 years from the date of such transfer, failing which the amount would be transferred to the fund specified to Schedule 7 of the Act. The auditor should also check whether the company has recorded a provision in the balance sheet date as per AS 29 Index 37, which are for provisions, contingent liability and contingent asset in respect of unspent amount of ongoing projects. So the auditor should also evaluate if the company has considered disclosure of such unspent amount as commitment in contingent liability commitment section of the financial statement in accordance with the requirement of the Schedule 3 of the Act, of the Companies Act. So in addition to the procedures which the auditor has to do while evaluating the CSR activities, the auditor should also consider the provisions of the Company Rule 14 while reporting the unspent amount under this clause. So the auditor may refer to guidance note given on special certificate which are issued by ICAI for doing the same. This would help us a lot because it has given clarity in various issues. Also, the auditors may also consider obtaining a representation from the management regarding compliance of requirement of section 135. This is very important because the management is responsible for each and every CSR expended. And in case the company has not transferred the unspent amount in respect of ongoing projects to a special account specified under section 135(6) of the Act within the time limits, the auditor has to take much details of the same, because in CARO there is a specified box which has said that you have to report that unspent amount of ongoing project in a specific format, and the specific format would be in the next slide. Can we go to the next slide, please? This is the specific format in which the CARO requires the auditor to disclose it when there is a delay or the company has not fulfilled its compliance of depositing its unspent amount into the fund specified. So they want for which financial year they have not transferred it. Second, the amount identified for spending on CSR activity for ongoing projects. The third column says it should be what was the unspent amount, then amount transferred to special account. So if there is the amount as per 135(6) which says for ongoing projects. Due date of transfer, due date would be the 1 month from the end of the financial year, that is 30 days from the end of the financial year, and actual date of transfer to the account. So the auditor has to find whether the amount is actually transferred to the fund, and if not, and if it is not done, in F column we can write nil, it is not yet transferred, which gives a qualified opinion in the reporting. And if after the lag of some days, maybe after 2-3 months they have transferred it, you can write the actual date, and you have to calculate the number of days in transferring the amount in the G section. So in this manner, the government or the MCA wants that on the face of reporting, the company or the stakeholder should know that the company is lagging in its CSR compliances. So on face, if the CARO report says that there was a delay, it would give a bad image in the eyes of the stakeholders or the people who are watching, reading its auditor's report. So the company would make sure that this box would not give a bad impression on its stakeholders, and the compliance of CSR would be done through by the company in the due course which is specified by the rules. So the auditor shall report compliances with any of the clauses, and in respect of ongoing projects, the company has to transfer their unspent amount to special account within 30 days from the end of the financial year in compliance with 135(6). Let's go to the next slide. The next slide also shows the requirement in CARO. They have said that if there is unspent amount, then this box has also to be filled in. It says financial year, amount unspent on CSR activity for ongoing projects, again for ongoing projects, and amount transferred to special account within 30 days from the end of the financial year, and the amount transferred after due date, specify the date of transfer. This is the reporting they want for this very specifically on face by the auditor. So the auditor should also report the non-compliances, and next slide. So in situation where there is a time period specified under 135(6) has not yet elapsed, and the time of issue of auditor report, the auditor should report under this clause on the basis of information till the date of auditor's report. So in circumstances, the auditor should appropriately bring out this fact while reporting, and should write a specific comment, and I have elaborated that comment for your reference. It says that the company has not transferred the amount remaining unspent in respect of ongoing projects to a special account till the date of our report. However, the time period for such transfer, that is 30 days from the end of the financial year as permitted by 135(6), has not yet elapsed till the date of our report. This comment would save the auditor as well as the company from reporting aspects, and also would help the company to save the negative image of its company in the eyes of stakeholders. Next slide. Now from this year, there has been an amendment in Schedule 3 of the Companies Act 2013, where there is a change that specific things of CSR has to be elaborated in Schedule 3, and what are they? I have highlighted in this slide. So when the company is covered under Section 135, the Companies Act, the following shall be disclosed in the Schedule 3. What are the things? There is amount required to be spent by the company during the year, amount to be of expenditure incurred, shortfall at the end of year, total of the previous year shortfall, reasons for shortfall, nature of CSR activities, details of related party transaction. This is also been details of related party transaction are also been shown in notes to accounts separately. So as the auditor would write in notes to accounts about the related party transaction, it would be very easy for him to pitch the information from notes to accounts to Schedule 3 of the Companies Act. So from there also you can pitch the information. And the last information which has to be given in Schedule 3 is where a provision is made with respect to liability incurred by entering into a contractual obligation. The movement in the provision during the year should be shown separately. So the company or the stakeholder should know that the liability which is created is being used in the subsequent years, and it's not being used for any other use. Going on to the last slide, can we go to the last slide? Reporting. In which things there should be a reporting in CSR? First is the financial statement. So CSR activity is to be entered as a separate item under CSR expenditure in the statement of profit and loss. So additionally, a note containing a breakup of various heads of expenses relating to item of CSR expenditure should be provided. The next one is cash flow statement. So in cash flow statement, disclosure of CSR activity has to be done, whether it is done through cash or kind, etc., has to be disclosed in the cash flow statement separately. So unless CSR reporting and practices are standardized, it is not possible to provide stakeholders with confidence that the underlying CSR disclosure are both reliable and comparable. So this proposed CSR reporting standard should therefore be specified in sufficient detail, similar to IFRS, to avoid inconsistent interpretation and application. Now for board report, it is mandatory for every company to forward to its member along with its annual financial statement board's report. So a board report is intended to explain to the shareholders the overall financial position of the company. So the board report shall disclose the composition of CSR committee, the board of director of the committee, the CSR policies, the projects approved by the board on its website, if any, for public access, and the policy developed and implemented by the company as CSR initiatives along with its annual report on CSR undertaken during the year. So the company is required to disclose and display these reports on company's website also. So in case of a foreign company, it should contain an annexure as per section 381(1)(b) of 2013 Act. So making the companies disclose their CSR activities and contribution to society, it's important to help the public make informed decision. So the investor these days are becoming very socially aware and wants to engage with companies that have a positive step for the development of the society. So the details of policy, its implementation, where it is spent, in which project, in which local area, the areas has to be specified. So the concept of CSR is based on the principle of comply or explain. So now there is a shift to comply or pay penalty. So it may also happen that the company is incurring loss, but it may still satisfy other conditions specified under section 135 of the Act and become liable to comply with provisions of 135. But since there are profits, the company may not spend any amount. So still it has to disclose the reason for not spending any amount in its board report. So if the company fails to spend, the board shall in its report specify the reason for not spending the amount, and in case it does not disclose the reason for not spending, the company may be punishable with fine. So in notes to going on to the notes to accounts, disclosure is required in notes to accounts about the amount spent during the year. Disclosure to be made in notes to accounts for cash flow statement, related party transaction as per accounting standard 18, which relates to related party disclosure. So the notes also has to clearly say the situation in which liability for CSR activity is to be recognized and its timing for its recognition, explaining also that rarely a company would recognize a CSR asset. It will generally be difficult to demonstrate control over such assets. So a detailed disclosure also has to mention as a notes to cash flow statement also, which would provide details of related party transactions such as contribution to a trust controlled by the company in relation to its CSR. So from this year also CSR form 1 is being mandated, and it also gives it also requires various information like nature of entity, then role of member, and it has to be like SIN of company, which is to be pre-filled, name of the company, email ID, date of existing entity, registration number, address, etc. So the chartered accountant who wants to file CSR1 has to get this information on hand to fill the CSR form 1 very promptly and easily. Next slide. Can we go to the next slide? I think with this we end up the session. So if any one has the doubts, so can we see any questions? So if we have any questions, then we can take up that.
Ma'am, is my screen visible?
No, yes.
Yeah, you can take up the question.
Yeah. This first question is, first time the company earned net profit more than 5 crores in 1920. The company didn't spend the CSR fund in 2021 and transferred to separate account in May 21. Okay. Now what is the option for the company to spend? The company wants to contribute to a trust with 80G and 12A registered trust. Please clarify what is the auditor's responsibility. Okay, first we'll take the first part. What is the option for the company to spend? So the firstly, the net profit earned is more than 5 crores, so it comes into the ambit of spending CSR of section 135. But the company has not spent the amount and has transferred to separate account in May 21. That is, they have considered it. So firstly, the company has to decide before transferring the amount is whether they want to use that amount for ongoing project or not ongoing project. Since they have created a separate account, they are planning to have it as not ongoing projects. So the company has the option for more 3 years to spend this amount which is getting transferred, which they have already transferred to separate account in any of the activities of CSR within end of the 3 years. So for 3 subsequent financial years, they can use this transfer amount in activities which are for ongoing projects. But at the end of 3 years, if they are not using it for CSR, they have to transfer it to a fund that is specified under Schedule 7 at the end of 3 financial year, that is starting from 2021 to the end of 3 years. So now going to the second part of the question, the company wants to contribute to a trust with 80G and 12A registered trust. So please clarify the auditor's responsibility. The company can engage any implementing partner because they want to contribute to a trust that they are saying that they want to take it into an implementing agency. So the company can do it, but the auditor's responsibility is whether it should be in compliance with the policy of the company, whether there is a board report, they have passed a resolution for the same, and all the trust is specified and registered, the fund is really transferred to the trust, and the trust is utilizing, because only just contributing to a trust does not matter to having the CSR activity done. The company has to check whether the trust has utilized the amount at the end of the financial year or at the end of 3 years. So firstly, it is the auditor's responsibility to check whether the trust has really utilized the amount and whether the trust is really having registered with ATG and 12A registered trust. So first the auditor has to check its registration, then has to check whether it is really utilized by the trust, and it is by CSR policy confirmed by the company. Going on to the next question, is it mandatory for implementing partner to have both 12AA and ATG approvals? Yes, of course, from this year, it's 12A and ATG approvals, they have to be done because the Amendment Act says that. But the implementing partner, if it is doing its ongoing project, then it is fine if it is not registered, but they will require re-registration from, because there is a amendment in the act. The third question is, board may extend duration of the project. How long the board can extend? That is maximum how many years can it go without transferring it to the government fund maybe. So can the board extend? Yes, the board has the power to extend the duration of the project. Firstly, the project should be ongoing project. Then only it can extend, and it has to pass a board resolution for the same. The duration can be for 1 year, and maximum it could start from 1 year, but the maximum duration would be 3 years. Because after the amendment, they want that 1 plus 3 year, the first year would be the project, and the year of which the project has started. It can go max to 1 plus 3 years, and at the end of 3 years, now after this act notified, the government wants that the board should review, monitor, and then extend the project again. And then also the board can extend it for more 3 years. But at the end of 3 years, it has to be monitoring the expenses and projects and policies, what are the expenses done. So just the idea of government is that it doesn't go without reviewing, because ongoing projects go without reviewing and the company doesn't know what's going on in the project. So just the motive of the government is to the project gets reviewed every 3 years. And after 3 years, if the board extends it, there is no possibility of transferring the fund to the government. But if it doesn't extend, then it has to transfer to the government fund. The fourth is admin overheads. Does this include salary and other cost of CSR department of the company? Does it include admin overhead of implementing agency? Please elucidate with examples. Firstly, admin overhead includes salary and other cost of CSR department of the company. The FAQs which are released right now has specified all the costs which will come under the admin overheads. But it would not include admin overheads of implementing agency. It would only be administration overhead of the company's department and the personnel which is done. If the company does the CSR on its own and it is giving its salary to its company's personnel, then it would be coming under administration overhead, but it would not include any person who is expending on implementing agencies. Can we get the list of agencies working on CSR activities? I am not sure about it, but maybe the government wants many implementing agency to plunge in, but on face there is no website where we can find the list of agencies. Then what if the company does not fit the company logo? Would it hit the case, it becomes a CSR activity. If the company does not fit the company logo on that water cooler example, if you are talking about, then it is fine. It will also consider it as CSR activity. But if it fits also the company's logo, there is no case that the company can deny that just fitting in the company's logo, I cannot deny it as a company's expenditure on CSR. So in both the cases, the expenses of water cooler is considered as CSR activity. The seventh question is building or granting house property to family of the employee and property is registered in the name other than employee. Is it considered as CSR in the name of providing shelter to the needy? The name other than the employee. Yes, if the company's policy is to give providing shelter to the needy, if the policy specifies that they can give shelter to the needy, and in one of the policy they are giving a benefit to the family of the employees, then it can be considered as CSR. But directly, if the name of the house belongs to the employee, then that the amount or the cost that was included in building or that house property would not be considered as CSR activity. But it is in name other than the employee and it is benefiting the family of the employee. So it would be considered as CSR activity. But finally, the company should have a policy to give many people shelter. It should only not give a specific employee. It should have a total project of giving shelter to the needy. Can we scroll down to the 8th question? Whether provision is required in the books of account for unspent amount as per Ind AS and AS. Yes, provision from this year, provision is to be created. Till last year, it was not mandatory to create provision because creating provision or not creating provision would not give any effect. But from this year, it is mandatory to create provisions in the books of accounts. Certification program from institute and assurance opportunity in CSR activity. There is a certificate course of CSR going on in the institute itself. It happens every 2 months. I think it is starting. It has already started for this month. It has already been started from 14 September. Maybe after 2 months they reopen the new batch. The PPT is being already shared. What would be the role of independent director as regards to CSR? The independent director, firstly, if in CSR there is a CSR committee, and if in the CSR committee there are three directors, 2 or 3 directors, in which one is the independent director. So the independent director can do the same, have the same responsibility as the other directors in the CSR committee, can plan, can give modalities, moderate and evaluate the CSR project policies and recommend changes in CSR activities. He can give everything what a committee member of CSR can do it. CSR linked to company's income shouldn't be penalized as company does CSR only since it is in the business of making money, isn't so? Whatever is CSR linked to company's income, whatever the contribution as per income tax, the CSR expenditure is not admissible expense at all. So if they are not giving CSR as expenditure, they will not consider as CSR as income also in the books of accounts. So there is no point in penalizing. They are in CSR is an inadmissible expense. whether reporting of CSR activity at company's website is applicable to private limited company. If the private limited company falls under CSR ambit under section 135, it has to report its CSR activity in the board's report in the annexure 2. One of my clients identify an ongoing project and transfer the amount to eligible third party. The third party neither utilize the amount on ongoing project nor return the money. What would be my obligation in this connection? Does the company require to transfer those amounts out of its own fund to unspent account to the extent of the deficit? What would be the situation if the contribution is for government organization? First of all, the company has to recognize the unspent amount in its books of accounts. And in this case, it can show it in its balance sheet as a liability from the third party also. Because the company cannot go and transfer those amounts out of its own fund. Because they do not have the fund, it is lying in the hands of the third party. So maybe the company can show it in the books as liability from the implementing agency. And for transferring in, I think they can show as liability in the third party itself, because they cannot transfer the amount in unspent account as they do not have the money. It is now the liability of the third party to either utilize it or transfer it to fund what is specified in the rules or the agreement between the company and the third party. It all depends on the agreement which is done between the company and the third party. I think this was the last question, or do we have any specific changes relating to IT companies? Nothing specific is done for IT companies. It is for overall company use only. So what if the person participating in national level sports event happens to be our employee? Will that count as CSR spend? Yes, of course. As the CSR expenditure is done for employee specifically, it is by chance that the employee is in the national level sports. But as he was first the employee, then he went to the national level sports event, and now you are considering that expense as your CSR. So basically he was your employee, so it would not be considered as CSR activity by the company, because it comes under the exclusion that specifically you cannot spend it for your employee. But if he was a national level sports player, then he becomes your employee, then maybe you can consider it as the CSR expenditure. But most cases, first it would be your employee and then he may be participating in national level sports event. So it would not be considered as CSR expenditure. What is the responsibility of private limited company on CSR compliance? It would be same as the other companies. If it is falling under the purview of 135 then all compliances what I have said or elaborated today, it falls under the same compliance. There is no bifurcation given between private or public limited company. Suppose no project is undertaken, and for the unspent amount, whether we need to provide in accounts for unspent amount. Unspent amount not relating. Suppose no project is undertaken, and for the unspent amount, whether we need to provide in accounts. Yes, for unspent amount, we need to provide in books of accounts. But first we have to specify whether it is ongoing or not ongoing. As you have specified that there is no project undertaken, means there is not ongoing project. Means this is not ongoing project, so you just have to provide in books of accounts and transfer it into the Schedule 7 fund. Because there is no project undertaken, so it is not ongoing. So you have to transfer within 6 months to the fund specified. Unspent amount not relating to ongoing projects is to be specified to specified fund. What is the time limit? It is 6 months from the end of the financial year. If one corporate joins the CSR activity done by another corporate, what are the checkpoints to be followed? The checkpoints followed will be the same. Whether your company policy is to be doing the same activities, whether the activity is falling within the Schedule 7, whether the expenses are really done by the third party, the checkpoints would be the same as you are doing on yourself or your implementing agencies doing. There will be no change in it. I think this is the end of all the questions.
Silva sir, any other questions, please? Silva sir, any questions? Okay, I think if there is no more questions, I think it was a real wonderful session, madam. I think all the participants will really appreciate the way in which you took across this session for about 2 hours. And I think we have addressed all the questions which were received till 16:56, if the time is correct. I think till the last seconds the questions were sent across. I think we have addressed. I think it was very, very elaborate, starting from the CSR definition with respect to section 135, then mandatory CSR spending. Then you gave an idea about the capital asset, how to create it, and then the detailing of CSR committee requirement, and then the implementation partner details on that, and increase in the internal control because of the need for CFO certifications, and then the great impact assessment what we have to give across, and then the international organization about which it's starting new. And going about, you are also detailing on the penalty classes, then how to account even to the core of making the journal entry, then auditing requirements, and then with rules and responsibility of the auditors, and the UDIN mandatory for the grant utilization certificate. Without extending it to the CARO reporting in detail, the class 10 duties of the auditors. Then you also mentioned in detail the working papers requirement and the reporting format, which will be very useful during the time of our certification and reporting. Then the latest amendments in Company is Act 2013 Schedule 3, and finally, where are these CSR activity to be reported, like financial statements in detail, then cash flow statement, board of director reports, and notes and account. I think it was a total session starting from the initial and ending with a complete overall view. And I think the participants who were there right across all these 2 hours really have enjoyed, though it was like a marathon race. And I think we really appreciate from the SIRC that it was a wonderful session. I thank you on behalf of the SIRC for the time you have spent with us in making this session wonderful. And I hope all the members would also accept the fact. And I thank all the members who have participated for this 2-hour session. Thank you. And thank you, ma'am, once again. Thank you, members. And I think it's a great day for us and everybody. Thank you, ma'am.
Thank you, sir, for wonderful words. And thank you for being together with me for 2 hours, and everyone who supported me. Thank you so much.
Thank you.
Thank you, sir.